It doesn't look like energy prices are going to rebound anytime soon. Shell's still interested in new projects at $50 a barrel, and Boeing goes nuts for biofuel. All this and more on today's Energy Scout News. Hello and welcome back once again to Energy Scout News and Information. I'm Red Byers. As economic conditions worsen, the United States Energy Information Administration slashed its energy price forecast for next year. The EIA says American motorists will pay around $2.37 a gallon at the gas pump next year, with oil averaging at about $63.50 a barrel. Now, compared to the agency's last forecast, that's a drop of about a third for gas prices and nearly half for oil. EIA industry economist Michael Morris says it boils down to one cause.
A fundamentally weak economy. Incomes have fallen off substantially. Economic growth outside the US has also fallen off, which gives rise to falling oil prices as well.
And while the lower prices may seem like good news for consumers, the industry is likely to take a hit for the next year or so.
I think you're going to see substantial declines in rig counts, at least, as I said, through the end of 2009.
Shell says oil's got further to fall before exploration slows down. According to CEO Jeroen van der Veer, he said investing in oil projects could still be attractive at $50 a barrel, so long as tax and royalties didn't get too high. Now, many officials in producing countries have said oil needs to be around $80 per barrel to justify new projects, but Shell remains interested in deals such as new Iraqi contracts. However, the CEO did say the current economic crisis throws doubt on some of the more expensive projects, such as pipelines and oil sands. Alaska's got plenty of ice and hydrocarbons, and a new report suggests they may have quite a bit to do with each other. The United States Geological Survey says Alaska has 85 trillion cubic feet of natural gas. It's trapped in ice formations beneath permanently frozen subsoil and offshore. Now, that's enough to heat more than 100 million homes for a decade. It's found in the form of hydrates, which are crystalline structures made out of gas and water locked below the permafrost. Interior Secretary Dirk Kempthorne has stated that hydrates have more potential for energy than all other fossil fuels combined, and this is a huge resource for energy, and one cannot overstate that. Chevron does well on blind faith, but first, a look at today's mergers and acquisitions. Pinnacle Energy has secured the rights to additional acreage adjacent to the company's Glencoe prospect in Pawnee County, Oklahoma. Western Gas Partners will buy midstream assets in the Powder River Basin from Anadarko Petroleum for $210 million. And finally, ABB plans to buy Burmac Electrical and Instrumentation Limited of Calgary, Canada, to expand its presence and capabilities in the oil and gas sector. Chevron has started crude oil production from its Blind Faith field in the deepwater Gulf of Mexico. Blind Faith is Chevron's deepest offshore production facility. It's located about 160 miles southeast of New Orleans. Daily production is expected to ramp up to around 65,000 barrels of crude oil and 55 million cubic feet of natural gas over the next 3 months. You could say Boeing's going nuts for jet fuel. The jet manufacturer in Air New Zealand will fly a jumbo jet powered partially by biofuel next month. The flight is scheduled for December 3rd, and one engine will include a 50-50 mix of jet fuel and oil from the jatropha trees. Now, many biofuels such as ethanol freeze at cold temperatures that jets operate in, but fuel from the jatropha nut has been much lower freezing points. Now, Rolls-Royce has tested the fuel mixture and said its properties are virtually indistinguishable from conventional fuel used today. OPEC's planning another meeting to cut production again in response to declining oil prices. On this week's Financial Scout Report, energy economist James Williams with WTRG Economics takes a look at the long-term effects of such a move, which could actually send prices lower.
Well, let's just say OPEC cut 3 million barrels a day. All of a sudden, their spare capacity tripled. And one of the things that allowed oil prices to get as high as they did over the last 5 years was the lack of spare capacity. We went into this price run-up in 2003 with 7 million barrels of spare production capacity, and that's enough to take care of 2 major interruptions, big countries, anybody but Saudi Arabia. With the PDVSA strike in Venezuela, followed by the war in Iraq, plus China growing rapidly in terms of consumption, all of that spare capacity suddenly disappeared, and we've had a significant risk premium in for years. And the more that OPEC cuts, the more that risk premium goes away because, if they cut 3 million barrels a day, we know there's 3 million barrels a day of spare production capacity.
You can learn more by visiting the WTRG Economics site at www.wtrg.com. And that's it for today's Energy Scout News. For more information on these stories or more, be sure to check out the news section on our site. And remember, if you have any news tips from around the energy industry, you can email us at news@energyscout.com. And as always, we look forward to seeing you tomorrow.